Let's move along to the trade of the day. We can get that up, which is focusing on my favorite cross, dollar yen. Yen backs off early highs as Haven buying recedes, with traders shifting focus to US and global economic fundamentals. Yen breaks above the May 16th high, rising towards 113.58. First level of resistance should take the yen up to 113.75. Above that target's 114.35. Buy at 113.80 on stop, with a stop loss then at 113.50. Take profit at 114.50. Risk reward ratio 2.33. So looking for the yen to weaken. Obviously what Mr. Abe would like. Any views on that, Sean?
Well, I do have some, which is if you look at the ebb and flow there on Zach's chart, this is really completely against what economic theory would have told you in the sort of credit crunch, or pre-credit crunch, excuse me, times, because you would think, I looked up their balance sheet the other week, 514 trillion yen in total.
Is that quite a lot?
Well, yes. It's so much when you look at the thing. They have so many noughts on the page, and then you discover it's in units of 100 million yen because they can't fit them in.
Okay.
But the point is here that it should be the super soar away yen, to put this in sun terms, and we should be here discussing something like 150, 160, 170, if that holds true. But it isn't, as you can see on your thing.
So the safe haven, where does that come from? The safe haven concept, which is obviously keeping it down. Where does that come from?
This is sort of one of the oddities,
Madness.
isn't it? I suppose. Money going back to Japan. They did, in preceding decades, pour money out of the country. That's one possibility. There's a few other theories around investments, but each sort of yen rally, well, it breaks old era economic theory each time it rallies, because it just, as I said before, to be way above here.
Well, we love economic theory, though, don't we?
And I do have, before we wrap up, one currency view, kind of, for people. You were looking at the Australian dollar before. Should the British Lions win on Saturday, I confidently expect the Reserve Bank of New Zealand to cut interest rates.
Okay, well, we'll look out for that enjoyable prospect. As far as the trading positions are concerned, traders long of euro dollar and I suppose 50-50 on sterling. Quite short on dollar yen, which could be painful given where it looks as though that cross will go. Very short on the Swissy and Canadian, and then going for long on the Aussie and long on euro sterling. Calendar for today, relatively thin, but we do have the, as we mentioned before, the FOMC minutes and the Fed monetary policy report, factory orders at 2 o'clock. So thank you to Sean Richards from Not a Yes Man Economics. That's it for FX Street Currencies in Play today.